Hi everyone, thank you so much for listening. My name is Ellie and I am a junior in the AIM program studying finance with a minor in criminology and law, and I cover domestic consumer discretionary. Today I will be presenting National Vision Holdings, ticker EYE. I want to begin by reviewing my screening process, in which I was looking for companies that could offer stability but also a solid growth runway. National Vision's low cost, low price operating model in today's environment and its good industry tailwinds led me to my decision to recommend it. National Vision Holdings is one of the largest and fastest growing optical retailers in the United States. It has over 1,100 stores and has several e-commerce websites. It operates through two main segments, owned and housed and legacy segment. The owned and housed segments include the brands America's Best, Eyeglasses World, and Vista Optical locations and Fred Meyer stores, as well as stores on various military bases. The legacy segment includes the operation of inventory and laboratory processing services to vision centers and Walmart's retail stores. National Vision was founded in 1990 and went public in October of 2017 and is headquartered in Georgia. Now moving on to my recommendation. America's low-cost provider of a medical necessity, National Vision Holdings' core strategy is centered around a price-conscious and value-oriented business model. Simply not just a specialty omnichannel retailer, National Vision has proven itself to be a unique combination of an off-tail retailer, discounter, and healthcare provider. A major player in the $36 billion U.S. optical retail industry, National Vision's store build rate and sticky customer base has allowed to grow competitively and take advantage of the industry's 3% CAGR. Having comped positively every quarter for the last 72 quarters for an average overall comparable store sales average growth of 5%, it took COVID-19 to end National Vision's positive comp streak. Although having temporarily closed stores, the demand for National Vision services persisted, resulting in June adjusted same-store sales being the highest it has been in 18 years, at 19.3%. Due to this trend and more tailwinds, it is recommended National Vision Holdings be added to the AIM Equity Fund with a price target of $46.23, representing an upside of 22.74%. Now moving on to my first driver. Due to the increased usage of electronic devices, the U.S. population's time spent viewing electronic screens has increased significantly. It's been reported that approximately 60% of American adults have reported experiencing symptoms of digital eye strain. This is because 80% of American adults typically use digital devices for more than 2 hours a day. With eye exams driving service revenue increases of 11%, the increasing percentage of the U.S. population suffering from screen-related vision problems will result in sustained unit growth and new eye exams and product purchases. Along with this new emerging generation of screenagers, as the U.S. population life expectancy increases, increased repeat repurchases are expected since the need for vision correction increases significantly starting at the age of 45. Although eye exams and new product purchases are traditionally performed at an interval of 20 months, with an increasing customer base and an average of 2/3 customers being repeat customers, there's an expected average interval decrease, creating a revenue increase with minimal costs. Now moving on to my second driver. Having recently extended their 30-year partnership with Walmart for 5 more years, National Vision has been granted 5 new stores within the immensely popular chain, a significant decision since this is the first time Walmart has done so in the past 25 years. This extension creates a foundation for the company to start to employ offensive unit growth and margin expansion strategies, since Walmart locations average 40% higher store sales, with new opening opportunities to create a 23% legacy segment revenue contribution on top of the segment's compounding growth. There is also significant white space opportunity in the owned and housed segment, creating a 2.1 times future growth potential. Historically seeing 50 to 75 new stores being added in this segment, future growth is expected to stay close to 75 new stores a year, representing a potential 40% average contribution to total revenue and continued 5% comparable store sales growth comps. Although a prototype shop usually takes 5 years to reach maturity due to buying cycles, increases in customer bases due to vision-related trends, and increased regional exposure in off-mall locations will decrease buying cycle intervals and create a runway for comp growth as each annual class of stores enter the comp base. Now moving on to my last driver. Facing a highly anticipated presidential election, National Vision's diversification and value orientation allows it to benefit from periods of economic downturn and high uncertainty. Due to National Vision's diversified customer demographic profiles that reach both blue-collar and affluent customers, they have created the ability to appeal to various markets, which speaks favorably to their growth potential and ability to open new stores in both operating segments, regardless of market condition. In addition, with the increasing percentage of National Vision's customers receiving vision care insurance coverage through managed care payers, National Vision's focus on value has allowed them to be north of the 25 and 30% managed care penetration rate. With increased uncertainty, National Vision expects to average 50 to 55% penetration rate, benefiting their owned and host revenue segments. Now moving on to my valuation. In order to reach an intrinsic value, a 7-year DCF was constructed. Using a terminal growth rate of 2% and a WACC of 7.697%, an intrinsic value of $45.66 was reached. Additionally, a price-to-book multiple valuation was conducted using a blended average price-to-book multiple of 3.53 times, resulting in a value of $39.39. Lastly, a price-to-sale multiple valuation was conducted using a blended average price-to-sales multiple of 2.2 times, resulting in a value of $52.24. By weighing these three models 70%, 10%, and 20%, a price target of $46.23 was reached, resulting in a 22.74% potential upside. Now moving on to the risks. Since going public in 2017, National Vision has seen an optometrist wage inflation. Although management expects a stabilization, the inability to attract and retain vision care professionals through competitive pay can hinder sales growth and customer retention. Secondly, National Vision has a significant amount of debt, which could adversely affect their financial position. Although recently entering into an amendment to their credit facility that strengthened their liquidity, National Vision still faces potential uncertainty in the long term. Now moving on to management. Reid Fass has been the CEO of National Vision since 2003 and has been accredited with their leading position in the industry. Patrick Moore has been National Vision's CFO since 2014 and has more than 25 years' experience. The board is 37% female and is comprised of diversified experience from various market leaders in the optical market and is majority independent. In conclusion, National Vision's leading position in an industry that not only is selling a medical necessity but has experienced significant tailwinds makes it a valuable contribution to the AIM Fund. Thank you so much for listening, and I look forward to hearing your questions.